Thank you, David. Thank you, David. All right. Perfect. All right, here we go. So let's just try that again. Thank you all for joining me on Schaeffer's Playbook of the Week. My name is Matthew Timpayan. I am Senior Market Strategist over at Schaeffer's. I'm also a CMT, Chartered Market Technician. So today I would like for you guys to send in any kind of tickers that you have that you may want to chart or anything like that. It was a holiday shortened week. Joe is out traveling, and I actually just got back in last night. So, kind of a catch 22. We're all traveling for the holidays to see family and things like that. But we got a playbook. I was able to put something together for everybody. First off, I just want to kind of say is condolences and rest in peace, to our late president Jimmy Carter. He passed away this weekend at 100 years old. That's quite a life. He did a lot of great things, especially outside of the presidential office. He was big on, I think it was Habitat for Humanity, and just did a lot of things for the public good. One of the most active presidents outside of his presidency. He kind of gets a bad rap because he had a pretty bad, inflation situation going on during his presidency. What a lot of people don't remember, though, is he actually, as a Democrat, oddly enough, even deregulated a lot of areas, cut taxes, and appointed Paul Volcker. I think there's one mistake was maybe keeping it was, I believe, it was Arthur. I can't remember his last name, but Arthur. He was the sitting Fed president in the office a little bit too long, and not pressuring him kind of out of the Fed chair role. He was a Keynesian economist, and he was not really trying to fight his way out of the inflation. There is news here. Nasdaq and the Dow and the S&P 500 are down about 79 basis points. We'll take a look at that here once we get to the live charts. But it was down about 79 basis points when I looked last on the futures. Really, there's some seasonal selling going on, right? As we head into the new year, we typically see some weakness a little bit in the final 2 days. So you kind of get the Santa Claus rally, and then you get this little bit of, dissipation of that Santa Claus rally. It can continue, but a lot of the times, even if we do get that Santa Claus rally, that is kind of almost over with by now. Even though it's the final 5 days of trading in the new year, the final 2 days typically, from a seasonal perspective, are often negative. So we're going to see what we're going to be able to do here going into the new year, and then we have some position updates, and then we're going to take a look at some charts. If you don't have any, I do have a bunch, and I do, as you can see here, have a bunch of screeners that I run constantly throughout the day, looking for new ideas, and I can pull some things right off of that. So let's get this slideshow over here, and let's do entire screen because I want to be able to do charts right after. All right, perfect. I do apologize that it's not in full screen mode. It's kind of got a window around it. Had a little trouble. I need to update my PowerPoint, but I wanted to get on here live because I ended up on a different copy of the Playbook of the Week. So, which is the back end of video production. So that was my fault. That's why I'm a little bit late. But let's take a look at what the markets are doing here. The S&P 500 was up last week. It was a little bit of a rebound week, 0.67%. With that said, I do think that markets, are kind of set up for a decently, bullish situation heading into 2025. Even if we kind of get more of a buying opportunity here, we'll have to see how that goes. Obviously going forward, but right now, I mean, we're still very much in a bullish trend. And I don't see that necessarily cracking right now. Obviously, this is kind of the point where I could be totally wrong. But right now everything looks pretty decent. We're starting to see some things pick up in the economic standpoint. LEI is turned up, so leading economic indicators, which everybody thought was kind of a bear omen before, and it typically had been, but there was some differences in this past economic and business cycle here. And then we have the Dow Jones Industrial Average as well. That was up 35 basis points, and then the Nasdaq was up 86 basis points, with the Russell up only 10 basis points. So that one kind of took the biggest hit. If there's one thing about the Russell, if I remember correctly, And that is actually now below the election night results. So that has given back everything. Um, that's not really a great sign there for small caps. So we've seen this little bit of a flight to safety again within those large and mega cap names. Even if they're not the safest assets, even if they're a crowded asset and a crowded trade, you're seeing a move to them, to the Apples, to the Nvidias. With small caps kind of having trouble again. And then the Treasuries were down. TLT was down minus 1.37% last week. We did see the 10-year kind of break out a little bit there too. So yields are pressuring the markets a little bit, and volatility actually snapped back, was down 13%, but it didn't give everything back. So volatility is still elevated here. USO tracks oil was up 1.03%, and then gold was down 29 basis points as well. All right, let's click on here. All right, so here's the Dow Jones chart, and we are kind of in this channel. I just kind of quickly drew a channel. If we do break out down from this, which very well could, if we get some selling pressure here today, obviously with markets down, your next buy point, I'm really looking here on the Dow, somewhere around 4,200 to 4,100. I call it a zone because you got multiple points here. You have this November low. You also have this or September high, and then you also have the July high right here. So I would expect this area, if you do get selling, it's going to probably be pretty decent selling. I wouldn't expect it to be not violent. I would expect it to be pretty quick and fast. It's already kind of filled the gap. So if it does come back, I do think you get a lower bounds test into this zone area. And then you have this 200-day moving average coming right up into it as well. The S&P 500, that is kind of starting to struggle now at the 161.8, or well, the 1.618 Fibonacci extension level here. And that is off the July highs and the August lows. So it's a normal area that you would expect to see some type of consolidation, pullbacks. You can see here back in November, perfect spot right there before we got that pullback. So now we're pulling back into that 50-day moving average here. I do expect that we're at least going to open lower, but look for the markets, if we can, to regain that 50-day moving average on the S&P 500. That is what you want to see going forward, is for that to be regained. Otherwise, you got your support level here around 58.50, 58.70 per se, from those highs back in October here and September, or October. This is actually, oddly enough, I left this on the chart. It's not perfect. It doesn't look pretty. But that was the previous trend before we broke down in July and August there. And as you can kind of see, it's pretty, closely, would line up with that trend line from these, higher series of higher highs here. So price does have memory, and it's kind of remembering this old trend line. That's why I left it, and just kind of wanted to show you that. So if we did for some reason break down, below that 58.70 level there, expect it to kind of go down to about 57.50. You have this 100-day exponential moving average here as well. And then it's kind of the point, like I said, of you got the September highs, and then you got these October wicking low, and then you got this like move down here where it was an island reversal. It didn't stay below it very long, and then it kind of reversed higher. So after that, it's full retracement all the way back to that July high. All right, NASDAQ 100, kind of same situation, riding in a kind of a trend channel here. That has not gotten to its fib extension. And, if we do get a pullback and outside of this trend zone, that's the thing about price channels. And one thing that I'm not, I guess I would say, the biggest fan of on price channels. Is why you see me with a lot more horizontal markups here on support. Channels can move, plain and simple. Channels can move. If for some reason we break down through the 50-day on the NASDAQ 100 and through this price channel, and we go to 20,000, 700 here from that previous peak in July, the channel just moves down. So the channel would catch it and it would just be a new channel made. Um, that's kind of why I actually left this on there. Obviously channels aren't like unimportant, but channels do have the tendency to be able to move. As you can see, you just go from this low here, instead of kind of riding the trend channel there. So that's kind of my take on the Nasdaq 100. I do think we're probably going to obviously open lower. Look for some levels here around that 50-day to kind of hold. That's what we really want to see if we do get any kind of selling pressure right off that open today. Let's take a drink here. All right. There is not much for earnings on the horizon. Obviously, with the holiday week, markets and companies try to not have earnings around this time of year. Last week, I believe there was nothing. So this year, let's see, right after the holiday, we have RGP and Lifecore, two names I am not even really got the slightest clue about here, so I'm not going to comment on them. But they do report. Friday, I do see that there was a company reporting on briefing.com, and Earnings Whisper did not have it. But it is ticker symbol GBX. That is Greenbrier. It is a rail car company. It's a name that it's hard to trade options on. Sometimes it's kind of illiquid option wise, but it is a name to keep an eye on. It's a great transport name. It's a name I've liked to trade when I used to have a high yield portfolio for clients back when I was with investment firm. Our GBX was often in that type of portfolio for us. It's actually pretty volatile, but it does. If at least it had a pretty decent yield at the time, so maybe it doesn't anymore. But it's a name to watch. It's a good stock trader. If you're looking for some volatility in a name that's kind of a trusted name out there, Greenbrier GBX. All right, the week ahead on the economic data front. On Monday, we have the Chicago PMI and the November pending home sales. Now, I don't have my notes here, so I'm going to just pull these up super quick, just because of the problems that I'm having uh, with the PowerPoint today. So let's just pull this calendar up. All right, log back in. Neither one of those really market moving, I would say. From a perspective, Chicago PMI and the pending home sales, I don't think they're going to be anything of any relevance. They're typically low impact economic reports, and you know, consensus does have pending home sales down to about 0.9%. Prior month was 2%, and then Chicago PMI is expected to rise here to about 42.7. That was 40.2. But again, low impact on trading markets. So on Tuesday, we do have the October S&P Case-Shiller Home Price Index. Also low impact there. Nothing too big. Then Thursday, after Wednesday, so Happy New Year, everyone, as well. But Thursday, we have the initial jobless claims. We have crude oil inventories. We have Fed balance sheet. And we have Atlanta's GDP now. Initial jobless claims, it does look like consensus is above last month's of 219K at 224. If we did get a surprise to the upside, that would probably shock markets. That's definitely something we don't want to see heading into the new year. We want to have that January effect carry over. We've had a great 2024 after a great 2023. So hopefully we don't see anything like that. Briefing's forecast is actually above consensus. So that was 225K. So that's not huge. So they're not expecting too much of a surprise there. So do watch that number a little bit. And then, like I said, we have oil inventories. So if you're in crude stocks, those always can be impactful. If not, no big deal there. And then the Fed balance sheet, which, anybody, I guess, economists and macro guys, they'll watch that a little bit more. And then Atlanta's GDP now. If you've never seen that, it's a forecasting tool. Always go check it out. Just type in Atlanta's GDP now. It's pretty accurate. It can have some misses, just like anything, but they kind of give you a little bit of a overview or a preview of what GDP numbers are expected to be. Friday, December, ISM manufacturing. That is the big one of the week, in my opinion, here. And it is expected to be up slightly, 48.5%. Versus last month, 48.4%. The briefing forecast, though, is up a little bit higher. They expect a bigger beat, 48.7%. And that would be something that would be welcomed. We've seen some divergences when we look at like rates to the gold copper ratio, when we look at rates to the City Economics Surprise Index, when we look at rates to ISM manufacturing, right? So it's been this weird kind of business cycle, and one of them you would expect to revert. And we really kind of hope, at least I do, bulls should, hope, and I'm an optimist. Bulls should hope that the manufacturing index reverts more towards those yields. All right. Trade of the week and position updates. All right. Roku. Roku was January 3rd, 86 call. Max so far 0%. I hope I'm right on that. I'm just taking over the slides from last week. Currently, it is minus 98%. You should be out of this position. Definitely went through that minus 50%. The VWAP entry was 360. Expiration is this week. So if for some reason you are still in it, look for an exit opportunity if we do get any kind of move higher. As of right now, obviously, it's probably not worth much, so you probably just hold on to it. But it is 16.3% away from 100%, 21% away from 200%. Roku can move that much in a week. We've seen it before. We'll see it again. It is pretty volatile when it wants to be. So what now, though? You do have some overhead resistance here. You have $80 resistance. You have $82 probably resistance up there. I would say the big one's 80 here. You get through 80, you might be able to rip higher. That's where you want to get through. It held that 50-day support. I don't think you really get past the 88 resistance if it does come back. So as long as it holds the 50-day support and it can get through the $80 resistance, then you would have a shot at this finishing maybe in the money to gain some of that money back. If not, really you should be out of this. It should be a close below was $80. Joe gave instructions last week, even if you're YOLOing this. As you can see here, you got a 10 and 20 here crossing. So it's not a good situation. You really need a fast bounce this week, quickly here above 80. And with markets down in the pre-market, that's not helping the case. All right, Affirm. That is, I believe, and there was some issues with the slides and stuff. I just couldn't tell exactly. So I'm hoping I'm right here. January 17th, $70 call. If I'm wrong, let me know. I can go over what it would exactly be, but I think it was the January 70 call from what I could look from past videos and from the slides. That is currently down minus 70%. We've had some, end of year selling. It hasn't been easy on stock picking. I will say that. And I'll say that actually 2023 and 2024, as much as the indices look great and as much as there's been some sectors, breadth has just not been with this bull market. You have to stay with the names that have been trending. You can't verge out broadly. So it's been tough. And then you do get these snapback pulls in these leading names, and it's a little bit more volatile. That's not as consolidated and more of a digestion phase. It's definitely, you got some violent moves that typically take out positions. But that does have 3 weeks until expiration. You are 30% away from 100% or 29.6, 40% away from 200%. And then looking at this, you definitely do have some 66 resistance here on this little bear flag that it's kind of making here at the 10-day resistance. And then you would expect the 21-day also to have some resistance unless you blow right through it. And then $70. I mean, you're going to be here. It's a round number. You can see price got through a little bit here up to 72. So Hopefully, you got out of this as well at minus 50%. Close below 64 was Joe's instruction. So even if you're YOLOing, so I'm going to expect that you got out last week on a close below 64. Um, let's see. Oh, maybe not, because it was he gave those instructions on Monday and he had a big update. So I would continue to kind of use that close below 64, get out. Um, Really, the 62.34 level now kind of needs a hold. If you break it down on an hourly chart, there is some support there. If that doesn't hold, I expect it to go down towards that 50-day, towards that November high around $60. Boeing, there was news over the weekend on this. I did not want to kick off the playbook with that. 179 people died in a crash in South Korea. It was a Boeing plane. I believe it was a 737-800 or something. It was a precursor to the 737 Max. So, condolences to their families. It's South Korea. They have a great aviation system, much like the U.S. It's not like it was a country that doesn't have good planes and infrastructure there. So, um, this did open pretty much around 170 in the pre-market here when I looked. It did gain back about 5 of those points to about 175, right where this position probably would have been put on about. Max so far, you did get up to 53%. Currently, it was up as of the close on Friday at 22.5%. It is 3 weeks until expiration. It was 5.2% away from 100% and 8% away from 200%. That will change here on the open. Um, 181 resistance. This is a level I would look at, and then 10-day support. So, we are seeing, hey, this stock might open above that 10-day. It will need to, I think, kind of rebound. I'd like to see a close above that 178 support level. If we look at a chart that has other moving averages, the 252 or 1 year moving average is right there as well. So my take, um, you know, things changed since I said stay in. I would watch this open here. Obviously, you still want to close minus 50% below. Uh, and, you're going to want to see how this opens, right? If you kind of get, maybe a little bit more of a flush on the open and then it regains some short-term moving averages, watch like a 10-minute chart or something, or see how it rebounds even on an hourly chart. You want to see like the 5 unit cross like the 10 or 13 unit on a short-term basis there. I would look at the 10-minute and hourly to see if we get a bounce play out of it. Maybe it didn't have anything to do with mechanical failure. I didn't check the news yet, so I don't know. Maybe it did. You guys would probably know a little bit more on that than I do, since you're in the position, but I just haven't seen it yet. And we can look that up if we want to here. But fact of the matter is that's probably going to open lower here. Again, condolences to those families. We never want to see that. So, playbook trade of the week. Here, kitty kitty. All right, maybe some of you can gleam the trade that I have going here for us. Maybe you can't, but it is GameStop. So that is what we're going to be looking at this week. We have seen some unusual kind of activity in GameStop. Maybe it's nothing, but we've been seeing 125 strike calls being bought in January, and it's been a decent amount. It's actually been a lot. Now it could just simply be nothing, and maybe it was some jostling around, and isn't as much of a buy. When you look at the data as it may have been, somebody could have been trying to work the bid ask, right? But it looks like it was bullishly bought, and it's kind of weird. So it's not the full base case for this. There is a lot going on here with GameStop. It is also breaking above a base at that 30-31 area. Again, like I said, that unusual out of the money call flow. And we also saw it in the 60 strike contracts for January as well. So that is really weird, especially when it's January. That's right around the corner, $125. but you'll see why maybe here. It also had support at the 10 and 20-day confluence, which was supportive. You can see here, kind of held this area, and now we're above that base. Year-to-date volume shelf as well. So this is the big volume shelf where everybody's been buying. So you have some support in this area. And then we are above the 30 strike call wall. So that is good. That is the first thing that we needed to get above so that we can squeeze higher. Right now, if price moves higher, those calls are underneath water for the market makers at that 30 level. They will be buying stock. We also have massive calls at 35, 40, 60, and 125 strikes, as I already alluded to. So if this thing wants to move, it can start taking out these strike levels. It takes out 35, you're probably going to get to 40 pretty quickly. It takes out 40, there's a good chance you're going to get a real big move above 40. I would think, again, a move probably to $60. And that's kind of what we're looking for. We're not looking for the whole potato up to 125. I do think that's kind of crazy, but we're looking for a move above $40 here with this trade. And then January is the anniversary of the great squeeze. So maybe that's why there's some positioning in here. Maybe something's going on that we don't know about. They did raise money not that long ago, and I believe they already had $8 billion in their on their balance sheet. So they did do a raise, and then I believe Ryan Cohen, I believe he is the CEO still. I know he's the director of the board, but they said they weren't going to raise any more capital from stock sales. What are they doing with that money? I don't exactly know yet. I do have an idea, I think. I think very much like MSTR or SMLR. SMLR is actually a new kind of MSTR, right? They are going on the Bitcoin balance sheet per se. So they'll be buying Bitcoin with their assets. I think GameStop might be doing something similar to that. They might be looking at leveraging the meme stock mania and the cult following that it has, and then you add on, a balance sheet that is of Bitcoin that you can leverage, much like STR has and Sailor over there at MicroStrategy. I think you kind of have this ultimate volatility vehicle that could really squeeze. Now there is some bad things here too as well. So, but the good shorts are covering right now. Still, equity VIX is actually fairly low on a 52-week basis, which is I'm going to guess thrown a little out of whack because implied volatility is 100%. So this trade isn't um, for the faint of heart. It does have a little bit more risk. That's why we are going to be going a little bit in the money here as well. The bad is short percentage of float is only 7.6%. That's nowhere near the previous levels of the last squeeze. The last big squeeze, or even the previous squeeze in May and June. They are covering. They did cover on that squeeze there too. You didn't see them stick around and add more short positions like they did last time. They didn't want to get caught. But I do think if they do announce something big like Bitcoin on the balance sheet, this thing's probably still going to go crazy, just because the cult movement kind of behind it. There's also the possibility that 35 of the 40 strike call level acts as resistance. So that's the bad as well. Downside risk forgot to take that off there. So downside risk, there is, I would say, you re-break that 30 level. You re-break the 30 level, which we're going to open up. I believe it was somewhere around 31 something. We'll take a look at that before the open. But you break down there, you can get a retest of that 50-day into that volume shelf again. That wouldn't be good for our shorter term option around $25. All right, so here we are. We're going to go with the January 31 expiration. So that is a weekly. We want to be able to capture any type of January move. I know that we saw those call strikes in the January standard expiration, but when I went back, looked at the chart, looked at seasonality, the big run lasted all the way through January before we started really seeing some selling pressure. So just in case, We went out to January 31. It's not that big of a difference, to be honest. When I looked at January 31s to January 17s, with implied volatility the way it is, it's a little bit more. And in this type of play, we're looking for a big move, right? Uh, so we are going to buy. Oh, the January 30 call. All right. So the IV calculation does say the January 31st, 32 call because that's the right way to do it since we were trading around $32. So the IV calc was $9.25. The IV upside expected move is $37.86 based on that calculation. And the 30 strike call ask is $5.45. So that's what we're going to be looking at buying. It should be a little bit less than that. I believe when I looked at the bid ask last, it was 515, 545 on Friday. You'd probably be able to work that order down to about 530, 535, especially in this kind of name. A lot of times they're going to give you around that mid price. Break even is 35.50. The expected move is above that. I'm not sure why it says below that there. My apologies. Or the expected move is above the break even level. I apologize there. And then double is $40. Oh no, it's below. So the break even is below. Never mind. That's my bad. Sorry about that. The break even is below the expected move of 37.86. Break even is 35.50, and then the double is $40.90. That is above the expected move. But again, in a name like this, when it moves, it moves. Triple is 46.35. That is well above the expected move, and then the stop loss of 50%. Here's the payout diagram on the right-hand side. Distance to break even is about 10% there, and then your max loss is below 30 strike, the 30 strike level there, which is that's below. That's minus 6.8%. Not that GameStop can't move that in a day. It can. Just a quick thing on the parting shots, snide remarks, and wrap up here. We will look at some charts here as we go into the open and take a look at some things. But I just wanted to put this out here. Notes: Walmart, the December 27, 91 strike call expired at expiration. It was minus 46%. Robinhood also expired at the 38.50 strike call expired. That was minus 79.5% expiration. I know on Joe's notes you were supposed to be out of both of them, I believe, or at least Robinhood. But I think he wanted you to get out of Walmart as well with a small loss on that. And there was, you already had your 200% max targets anyway, so never mind. Roku, that is minus 70%. You should be out. Affirm as well, minus 70%. You should be out. Boeing, again, we're going to take a look at that here quick. A close below minus 50%, get out of this position is my opinion. You want to see 178 recaptured. But help Joe make playbooks what you want to see. I fill in here from time to time. We're both traveling, so I didn't get to do as much as I'd like to. And I know Joe was not going to be able to be on here. So email Joe any questions you have, so that he can go over playbook with you. He is a much better, presenter than I am as well. But here is this. I'm going to actually put this back up at the end. We're going to pop up some charts here. We want to see what is going on pre-market. All right. So it does look like GameStop will open around 31.70. Let's just see if we can pull up some pre-market data here. It's not showing. So quickly, I want the extended hours on here. So, all right. So as you can see, GameStop is actually pulling right into a level. You would see here these two previous peaks here on the hourly or the 65 minutes, which I use because that evens out the hours throughout the day. The hourly is actually technically a little bit wrong. But you can see here we're pulling right back into these two previous peaks, or three peaks even. And this is going to be a buy opportunity here, I think, GameStop in the morning. Obviously, we break down, you still have, kind of 31 here. So I would, maybe since we do have a little bit of a volatile open, maybe look at, hey, if I normally buy 4 contracts, buy 1 or 2 on the open, buy 1 or 2 at lunch. Maybe you want to even stagger that out. Hey, I'm going to buy 1 in the morning, 1 at lunch, 1 at the close, right? Um, or look through your opportunities throughout the day if you're able to. SPX, yes. As you can see, we are lower here on the ES. So we are down around the 50-day. So I would expect SPY will probably open somewhere around here, you know, 59.33. So just keep an eye on that. It doesn't look horrible though. It could just be a whippy day or with this ES futures market. You're pulling right back to those, October highs. We're going to be right back here. So, there's a chance we push a little bit lower, but I would expect today to be pretty volatile. Let's look at some ideas here. I don't see any tickers in the chat, so we're just going to kind of look at some. Rocket Lab, that is looking like it's going to open up lower. For me, it was always this level here, $28. A move above $28, and Rocket Lab could continue on its rocket ship ride that it's been on. This has been a name. We were in it in a hedge hunter trade, I believe. But it's been a good trading name as well. It's not a name that you can get a lot of. It's not super liquid, so you can't have a lot of contracts go in it at one time. So I think that's why it was like in a hedge hunter. We could probably put it in other certain other services, but certain services probably would be pretty hard to handle this. Let's see, real. That's another one that was on the bull list here. That's probably going to open lower, obviously. I still think this is probably a buying opportunity here on real. As long as we hold that 980 level, and really you kind of want to see $10 hold on this. This is a big breakout on real. It hasn't really been doing anything. It broke out of this big base, but for 2 years, it's just been in this huge downtrend. So, the chances are, if we still get this bullish 2025 move, you're above the $6 low here. You can see you had previous support levels right there, $6.50. So we're right through that. So now on real, if you want, this thing could really move. At a bare minimum, 1250. This thing wants to continue higher. I'd expect to move up to about $17, to be honest here. So look for real to move above that $11 area if you want to be, looking for, I guess, the more conservative setup, I would say, in waiting. But if you want to be aggressive, you can look for buy opportunities down here and use this level as your stop. So anything below 975, I would want to get out of this, close below that level. But if you wanted to take the morning selling, take an opportunity to try to buy towards that level on the real, not a bad idea. You can get options on this as well. And now let's look at Google. All right, Google's going to open lower, but it is kind of just pulling back into this previous area. So Google, you're going to want to see hopefully a move back above 91-ish, I would say. You want to see this previous high hold. But, the real buy signal for people that are a little bit more conservative, waiting for that breakout, I would say you want to look for a move above 196. But if you're looking for the dip opportunity right here, coming in, see maybe in the morning, see things turn. You kind of get this move higher. You can see like a turn here, right above the 10 unit. That's what you're kind of looking for. Character change here, trend change here. You got the 10 unit now moving higher. Those are where you're going to want to look. So as you can see, it's downtrending. So look around 10 unit moving higher. That's going to be kind of your buy opportunity there on Google. Lunar, is another name I've been watching that broke out last week. Any type of move down towards the 1650 level, I think is a kind of a buying opportunity. Use that as your stop. This is a fresh, clean breakout, uh, and this as well. I mean, it's old hockey stack pattern broke out of a base. I mean, the thing can skyrocket. I mean, Lunar is small name of as it is. I mean, it can move back to $40, not a problem for this to move back to $40 if it wants to. You're at $17. That's 100% move in equity. Options are going to be really expensive. So if you do look at something like options, look in the money on this. Let's pull up Boeing just to see where we are with that. So 174.64, 65-minute chart. So for me, again, I really want to see him move back above, kind of reclaim like this 178 level. I believe the 50 unit is up here too. When you look at like on the 1 hour or the 2 hour. So this is where you're going to really want to kind of see a move back above, I think, 178. So, you know, watch how this bear flag is kind of forming in the morning. You are still about 4.5 points off the low. 4.5 points off the low. 200 unit moving up here. Why is that backwards? It seems a little off, doesn't it? Right? Red 200 unit, 50 unit down below. Kind of weird. Let me just double check some settings here. Yeah, 200 unit. Maybe this is set. No? Oh. No. Simple moving average. You can see the difference here, though. Exponentials versus simple moving average. So, all right. So you're at the 200. I'd probably use that as your kind of line in the sand. You'd probably be below minus 50% on the open. I would think. But if you're not, I would use a move below 174. You might just want to get out of the way. But if they can move this higher, so I look for a close above 178 to stay in this is kind of my opinion, or kind of look at it below 174. If it looks like it's just bleeding, you might just want to get out of it below that level if it's below minus 50%. All right, Joby. So we got a lot of these names. I mean, even though we're seeing some consolidation, you're still seeing a lot of speculative moves in the market. Joby's another one that's kind of pulling back. These are really going to be choppy trades, but speculative name. Really, a move above 930 ignites this thing higher. ACHR as well, kind of in the same aviation area as Joby. That is already broken out. Move back down towards this 984 level, 985. That I think is a buying opportunity towards $10. You've got a fresh, clean breakout. You can move a lot higher from here. Again, it could easily go back and test, $16, $18 up here. So as long as we can hold this level, I think, a move higher. You do have kind of the IPO kind of 3-week run up here, but I don't think that's super significant. I think the move you really are looking for if you're in this kind of name is that 1650 and you're willing to risk $9.85 against that level. Main Financial, another tough one. On the bull side here, that's not really an option favorite, but stock wise, move back. It's broken out at $56. It's continuing to move. Quantum names are probably going to take a hit this morning with the rest of the market. No reason to be out if you're in, but they're continuing to move. Really, all you can do is kind of trail with the 10-day if you're in this position. If not, you can look at buying opportunities here. Use the 10 days as kind of a spot to risk against. As you can see, it's been following it pretty closely. And I guess UBT is very similar, same thing. Use that 10-day as your risk. Second opportunity to buy would be around the 20-day, but you do have a big pocket here on the volume shelf. QMCO, same thing, 10-day, following the 10-day. Momentum names love to follow that 10-day. DQ is a name that I was looking at here. Obviously, things could change, but it's of a chemical specialty corporation. Has ties to solar, if I remember correctly. Asian company here. Chinese company. I don't think China's dead in the water even with the Trump election, but you do have kind of a volume shelf here. If we can get above like these moving averages, I think this thing could spike again. LEU is a nuclear name that has performed quite well. As you can see, we're back here at these October highs, right into support. So we'll want to see the 67.5 level hold. But LEU is a name that I would keep an eye on if you're bullish nuclear at all. And then VNet, just the name I threw on there. That's breaking out right now as we speak above 440. And these are smaller cap names. We can look at some bigger ones here. Market's about to open in about 5 minutes, so I'm going to wrap this up. Apple still looks pretty healthy here, holding that 10-day. Might open a little bit below that, but we still have the 20-day right there. AVGO, Broadcom there, still holding that gap up. Went through the all-time high resistance level. Still moving very nicely. Held the 10 or got close to the 10-day. I'm going to guess that was probably the 8-day or the 5-day that it held. NVIDIA, one final one before we go. NVIDIA pulling back a little bit this morning here. You are still above these May highs, right? So let's just take a look. You really need to move above 140 to kind of get bullish NVIDIA. And even then, you're still going to have some congestion, right? You're going to have 145. You're going to have 150 to contend with. But I do think the big level is 140. That's the way price has been acting. So kind of watch that level right there. So those will be your levels on NVIDIA. If we do go lower, we really need to kind of get through this level here, 130. You can see here the 100-day exponential held that. Put in a 9er mark there. And then anything breaking down below 130. Then you can expect a quick, swift move probably to that 200-day. I would look probably still as a buying opportunity, right? Catalysts are still there for NVIDIA. AI is not going away. It's only going to grow. Obviously, it does need some digestion, and it's had a huge move over the last, over the last year more, actually. So that is it for me. I'm going to put the slides back up here for you so that you can see. We are looking at GameStop this morning. We want to get in this $30 strike call for January 31 expiration. We think there's an opportunity here right off the open. Trading around 31.74 last we looked. You should be able to get that for less than the $5.45. I'm going to guess closer to $5. That would make it nicer. That would give you a nice round 40. So you got those 40 straight calls. Hopefully we can get a double around there, depending on our entry this morning. But that is it for me. As always, thank you so much for joining me. Have a great day, everyone, and Happy New Year.